Hey everybody and welcome back to another video. This is How to Invest, Spencer here. This one is going to be on why the stock market started to crash today. This has really been brewing for the past 1 to 2 weeks. If you notice and if you watch the futures markets during the pre-market hours, every single morning they've been opening down for the past week, maybe even 2 weeks. And despite this, the indices have been able to rally back. Despite the Russell 2000, the Russell 2000 has been falling for the past week or two and been selling off. But the three major indices, the S&P 500, the Dow 30, and the Nasdaq, have really been able to overcome the futures opening up negative on a huge scale, because it's not just like a couple points here and there. It's hundreds of points that they've been opening up down, and they've been able to shrug this off. And there's been buying pressure consistent throughout the day, and indices have been continuing to rally to all-time highs. But if we look here today, they opened up all the way down. They almost opened up just about their whole loss for the day for all three of the major indices. You can see they opened up just about 1.59% down, and there was no buying pressure throughout the day in any of these three indices. A little bit in the Nasdaq throughout the mid-morning, and then a sell-off a little bit more, and kind of basically opened up right where, or closed right where it opened up. I was saying that the Russell 2000 has been kind of selling off for the past week or two, so there was some buying pressure, considering people were saying, oh, well, some of these stocks have fallen for the past week or two, and they've fallen, some of them upwards of 20%, if not more, that some of them are seeing this as a good buying opportunity, but it bounced right off of the neutral for the day and could not break the positive, and then continued to sell off, being a 1.5% loss in the Russell 2000. A lot of this is being chalked up to the Delta variant and fears of COVID kind of forming its maybe third or fourth, fifth wave, whatever wave we're on, whatever you want to consider it. And this can be confirmed in a lot of the travel stocks, considering there's a lot of fear in them and a lot of people are selling. Especially in the cruise lines, the airlines, and just generally anything to do with travel has sold off at least a couple percent today, 2 to 5, maybe even more, depending on how good or bad your balance sheet is. But I think a lot of this can also be associated with the huge sell-off, or not sell-off, the huge buying in bonds, which causes the yield to decrease. So as more people buy the 10-year bonds, the yield goes down because there are more buyers. And if we look here, it fell almost 10% today at 9%. If we look here, they fell quite drastically as more people bought bonds throughout the pandemic, as they were scared that they would lose everything in the stock market crash. And they made a slight rally as people began to sell bonds throughout the realization as the stock market wasn't going to crash and the world wasn't going to end throughout the summer to fall, and then into the first quarter of 2021. And we're seeing a very accelerated sell-off in bonds again ever since we had a peak in just about March, which is confusing a lot of investors and bond experts alike, because typically as bonds yields are going down, and as people are buying bonds, it is also good for high growth companies, such as tech and anything with a high multiple on it, which is because the relationship between bonds and tech is because the interest rate is, if there's low interest rates, it means that high growth companies are able to borrow more money at a lower rate and are able to reinvest this money into their company. But we have seen a continued sell-off in bonds for the past month or two, but a lot of the high growth names have been continuing to sell off with them. And this is really freaking a lot of people out and causing a lot of uncertainty, and why I believe is why there was no real buying pressure today in the major indices. I think a lot of people were generally really confused and cautious. They didn't want to dump a bunch of money into this dip because they didn't know if this dip would be 2 times bigger tomorrow. I think a lot of people are holding off for at least a day, maybe two, to see whether this was a bear trap or maybe this could be a bull trap brewing for tomorrow. So a lot of people just didn't want to get fooled and bamboozled by this because a lot of people do look to bonds to really base off their investing strategy. And when their bonds are going down 9% in yield, which means a bunch of people are buying bonds, it could be very scary. And I'll tell you why, because the number one reason, or not reason, the number one buyer of bonds is foreign countries, and a lot of foreign countries have been buying a lot of bonds currently, and over the past couple months, it's been in the news that Japan has started its largest bond buying spree in history, which has caused the bonds to go down from March. But not only foreign countries buy bonds, which is the U.S. government debt. I know China has been buying a lot too, but a lot of companies, I believe, are buying bonds as a fear of inflation hedge and a overall stock market crash hedge. Because if you're a company, a lot of times you don't want to invest in publicly traded companies or even privately traded companies buying stakes in companies because they can be considered too risky of an asset for your cash on hand. If you're a company and you have $1 billion and you are saving $1 billion to reinvest in your company, but you're not going to be spending it all at once, you would want to, in some way, invest this money so you can earn investment percentages on $1 billion because the more money you have, the more money that you make. So having a huge sum of cash on hand is honestly never a great idea because you're losing a lot of market opportunity and that you could be investing with. So a lot of companies will buy bonds as a safe way to invest their money because it is a guarantee by the U.S. government that they will earn a certain percentage and that they won't go negative. So even though these may be very, very, very small amounts of money, it is considered a guarantee. And there are no guarantees in the stock market. So this is a big reason why companies currently are buying bonds, I believe, because they are very, very scared just of inflation, which is already hit, and they are scared that maybe inflation will be here to stay and that they don't have any guarantees on reinvesting in their buying back in their stock or buying other stocks, and they don't have confidence in just the overall stock market in itself, saying that the stock market is at a very volatile and risky point to invest large sums of money in. So they're dumping it into bonds, which is why we saw an almost 10% decrease in yield, which means a almost 10% more increase in buyers today of government bonds in the 10-year. So that is why I believe the stock market crashed today. Thank you very much for watching and have a great day.